Assemblymember, right now, I would say I do agree with the author. I think this is a statewide issue, not simply an LA issue. Fortunately, though, this bill will be going on to future committees, and I think that that's something that should be addressed. You know, in the
we do have specific stories from actual residents from across the state, and I will ask my committee and some of the other supporters of this bill to prepare a document that includes specific stories. But I will tell you, if you do a Google search on this, you will find articles from newspapers across the state which does not look to indict this PACE program or devalue the really, unique benefit it provides in giving an economic incentive and a feasible financing mechanism to residents in our state who otherwise would not be able to upfront pay for very worthy upgrades to their home, but does raise real concerns that are bearing out as more and more people, one, are trying to sell homes, refinance homes, seniors are trying to reverse mortgages. These are real situations, and one of the reasons we have not seen this come to fruition until recently is because there's a life cycle to people owning a home, and they did these programs maybe in 2010, 2011, and now they're going to sell the house, refinance the house as rates stay low, and they're realizing that they were not told up front in a reasonable manner what it meant to have a super lien. They didn't realize what that would do to their number one investment for most people in our state is their home.
Last question.
And when you put a super lien on someone's home, there needs to be very serious and transparent disclosures to explain to that individual the ramifications of that. I mean, this is a two-pronged bill. We want to educate, inform, and give consumers the best possible information to make the best educated decision they can for that investment. And two, we want to make sure that they're not compromised with the biggest investment they have, which is their home, but do so in a way that does not compromise this PACE marketplace.
Okay.
We are very clear, and I've been very clear in my amendments and the work I'm doing with the stakeholders. We want to actually make this marketplace more sustainable and give it more standing with more residents who, like, if you have this bill go forward, I will tell you there's more work to be done. If this bill does not go forward, in the long run, when you have associations like the realtors, the credit union, people that are on the ground helping people buy and sell homes every day, and it becomes widespread through those industries that these programs are not beneficial to that investment, which is your home, that will have a chilling effect through this marketplace. If realtors across our state are advising their clients, both buyers and sellers, that they don't think that the PACE program is something that is a worthy endeavor if you're looking to sell or refinance a home in the near future, that I think will have a dramatic effect on how successful the program is going forward. I'll say that.
And furthermore, I'd like to add too, this is going to be a statewide issue. So clearly, if one region feels like it's going to be disproportionately affected over another, I would encourage anyone in the public in those regions to make their voice known. But I do think it's statewide, and also public comment is ended. But Assemblymember, please.
Yes, thank you. And I know the gentleman resides in Los Angeles and fights hard for our region, and is a partner with myself and many others to make sure we get our fair share. Mr. Staten, I see that you're from, with the chair's indulgence, very briefly, what, from your perspective, you're a provider, I think, very briefly, has not been
Assemblymember.
If with your indulgence, with your indulgence.
I'm sorry, I'm not giving you my indulgence here.
Okay.
We've already stated twice that public comment period is over. I tell you what, that's okay.
Mr. Vice Chair, the reason to hear opposition is simply to tease it out a little more. I heard two Northern California perspectives. I believe that they're different from LA County. You're the vice chair of the committee. I think it would help me, maybe others for this dialogue, simply to understand if other people have different types of opposition perspective to share. Very, very succinctly. With your,
I'm open to giving him 60 seconds to help.
With the indulgence of everyone on the dais? Okay.
Thank you so much.
With their indulgence,
I'm open to that.
You have 60 seconds, my friend. Go ahead.
So we work in contract with the County of Los Angeles and with all 88 cities within the county. The county, as the Assemblymember has said, oversees the program. They sign every single assessment contract. They have our underwriting guidelines. They have consumer protections. All of that is part of the contract that we have with the County of Los Angeles, which we meet with them on a daily basis. I meet on a monthly basis with the treasurer tax collector of the county, as well as the head of the Internal Services Department. And if there are issues, it really is a county problem, I would submit, rather than, and it's that county program. We also have 350 governments that we work with. It's a public-private partnership. So local government oversees our program. They are, in effect, our regulator. They can opt out tomorrow. They opted in. They can vote tomorrow to opt out, in the same way that every homeowner voluntarily agrees to put this assessment on their property. It's totally voluntary. Now, we have met with the chair, very much agree with the thrust and the approach on disclosure, and are interested in continuing to work on that. We feel also that disclosure is a critical issue, and it should be uniform across the industry.
Great. Thank you very much.
I would just, one more thing. Do you have any current subordination contracts within the work you're doing? Is that an option for residents?
Yeah. We offer subordination. We've been in business 18 months. We've been offering subordination for the last 4 months, and we have a handful.
And I will say this. If subordination is already an option and it hasn't destroyed the system, then I really do have to question the legitimacy of why subordination now would cripple the system. I would also like to say that while I have great respect for the County of Los Angeles, it's hard for any agency or body to regulate someone that they have a financial vested interest in. So we heard from basically the opposition already state that there is almost no regulation over this industry or these contracts. This is not something that is going to be an issue that we're bringing up because it's a regional issue. This is very clearly something that the Obama administration has several agencies writing memorandas addressing, that is going to basically prevent the largest backstops of mortgages in our country. 90% of mortgages in our country are backstopped by these federal programs that have made it very clear they are no longer going to backstop mortgages with super lean PACE programs attached to them. So for those consumers who buy into this program for very worthy reasons, this is becoming a balloon payment with the interest already factored in. So if they had a 20-year program that they thought they signed up for, God forbid someone dies, they lose a job, they have to move, we have another recession, we have another economic downturn. People lose value in their homes through natural market forces, and they go to sell that home or try to refinance it. Good luck with a $75,000 or $50,000 super lien attached to it that they have to pay off before they can move that house or move that property or downsize, or as a senior try to go into reverse mortgage, or whatever the situation is. This is not indictment on the PACE program, nor is this an indictment on the people running the PACE program, even though we did hear from the opposition who kind of brought into the spotlight some of the issues with that, and I look forward to working with those members of the opposition that highlighted that. This is, frankly, a very technical issue that is going to cause numerous consequences for our housing market in the near future that we have to address. We're very committed to do so in a way that allows for the opposition to be able to, find common ground where we can. But if you don't believe me, read the memorandas that are all in your briefs that come from the Obama administration, HUD, FHFA, FHA. I mean, these are obviously people that have been watching this and warning the state of California for nearly 6 years of the consequences of not doing something to alter this program and make it more sustainable. This is really going to make this program more sustainable. Thank you.
Thank you very much. I think we have another question from the dais. Assemblymember Bonilla.
Yes, I had a few questions, and I noticed too what the author said about the opposition wanting more regulation, and I thought that was really interesting, and particularly the data sharing piece, along with the 3-day right to cancel a contract. I think that was something that should be in here as well. One question, is this retroactive, or is it only moving forward?
Yeah. So we did take the amendment that is prospective.
So it's just moving forward.
It's just moving forward, yeah.
And I heard such conflicting testimony, and I think we all agree that most of the folks really benefiting from this are in economically disadvantaged communities with older homes, and the whole goal is achieving energy efficiency, and also it's the folks who can't afford some other method that are turning to this, and I think it's a great program, and so, very supportive of it. But I heard completely contradictory testimony that it was, and I'm still trying to figure out why it would destroy particularly the PACE program. We heard from Sonoma, I believe, where they were saying that the liens do remain currently, and so there doesn't seem to be this problem everywhere. Are you just looking for there to be a statewide standard, and some places it's applied better than others, or is it? Am I missing? What am I missing here about what's not working?
Well, I mean, the one thing I will state that we have made in the amendments that this is still a super lien. It will just be subordinate to the mortgage and the mortgage only. It has been made very clear by entities that backstop mortgages that they will not accept any property that has a super lien on it. But the lien will endure if the homeowner chooses to do so under the current program. Also, if you have a unfortunate situation with a foreclosure, unlike a judgment lien that could be dismissed, it endures. What is very telling is that all the opposition, and if you look at the statistics provided by a number of the companies engaged in this, including Wygreen, they're already currently offering subordination contracts. Wygreen says it's as much as 30 to 40% of their clientele are taking subordination contracts. The gentleman from LA, Mr. Statton, I believe, who has been a great partner in this, and we continue to want to work with him to find more common ground, admitted that they are already engaging in subordination contracts. I'm not sure the exact reasoning why, if they're currently allowing for subordination contracts for some, why if we allow that for all, it would destroy this marketplace.
That's kind of my question. Maybe someone can answer
I concur
that.
with you on that. So,
I mean, that's the question I would like an answer to, really, from the opposition, I guess, as an explanation of why is that the argument, that it would destroy the PACE program?
Well, I think there are two things. One, most of the issues that have come up actually have been around the consumer's knowledge of the lien. So it actually comes right back to disclosure as opposed to subordination. And if we already provide contractual subordination, that actually achieves the goal that I think the bill wants to do and does not change at all what counties already are doing in terms of all the rest of their local property tax assessments that all have senior lien status. So I think by singling out the PACE lien for subordinate status, you are sort of having a camel's nose under the tent for other local property tax assessments. And I think that's that's a reason why Sonoma and Placer and all other local and the county tax collectors have also all opposed this bill.
I will just state that there is no other lien that gets any type of preferential treatment like the PACE super lien. I mean, this is above. I mean, if you default on child support, you get a judgment lien or a mechanics lien. There is no other comparison to a super lien situation that the PACE program got. And I will say there is a unique place in our state to encourage and foster incentives for a greener economy, for solar, for efficiency projects. Whether or not this is greatly benefiting low-income homeowners, I think is something that we touched on earlier. I would have to look at the data and say, no, these are mostly people that have equity in their home. They have to be homeowners to begin with. Well, I mean, it depends on the statistics we've seen, and it depends on what is the definition of a low-income resident. But when on a day we had a press conference earlier today on housing and the affordability of housing and the availability of housing, you know, this is a unique situation where I think disclosures are obviously key to this argument. But to go back and say, I mean, if the bankers and any other financial institution came up here and said, well, we're already doing it, so why do we need regulations to be told we have to do it? I think all of us would have a hard time swallowing that position. There's a reason we're elected to enshrine and codify things into law to protect consumers. I would think this would be a worthy case of that.
Yeah, and I sit on local government, and I will reserve all of those county and city questions for that committee, but I think the amendment that you've come up with seems to be very reasonable.
I appreciate that. Thank you.
Bill's been moved and seconded. We have another question from Assemblymember Stone. Sure, I'll get you.
The PACE program was put in place very specifically as a matter of policy to incentivize a certain kind of investment in the home, and that was energy efficiency and solar, and to make sure that those programs proliferated. I think we're also seeing that we have that problem that I think you've identified, in that folks who already have a PACE loan are not now able to refinance or struggling, and so we've hit a conflict within the system that we've created. And I would absolutely agree that the PACE program is significant and needs to keep going forward. And I appreciate the amendments, and as we've talked, and I've talked to both the opposition and the supporters here, the fact that we're now requiring this contractual subordination, I think, is a real step in the right direction. I agree with Ms. Bonilla that there probably is some work on the disclosures. Yes, it's not exactly a mortgage, but I think a lot of property owners, it's tied up, similar to a mortgage.
I'd agree.
But it is distinct, and it's also distinct, I think, from other tax liens that may be attached. And I don't see that if this were to move forward. And I think you've done enough that I would agree that I think we should continue moving the bill forward. But I don't see how, given the uniqueness of this program, that is going to affect any other potential tax lien and want to see any requirement for subordination, because I think we need to make sure that we're protecting and managing this PACE program. And I think part of that and part of its viability is to answer this question for those homeowners about the information that they deserve, that they need to get as far as a disclosure, but also allowing them to continue to refinance, sell, and do all of the transactions around their homes that they would expect. And I think your amendment with the subordination, I know a lot of the providers already are subordinating, which is fine. That means not necessarily all of them are. And I think that's why, as a state standard, we want to make sure that we take that question off of the table one way or the other. If this is not the right way to do it, I'm interested in figuring out what that is, because we can't have a situation where we're ultimately putting the program in jeopardy because a typical homeowner who's within the bounds of Freddie Mae and Freddie Mac has no place to sell that mortgage, that credit unions, banks aren't willing to lend against a house or refinance against a house that has this mortgage. So that's really the nut of the problem, protecting the equity in the home, protecting the homeowner's ability to do what they need to with the home, but also protecting the PACE program, because as a matter of public policy, it is good public policy. And we absolutely need to continue it. So I appreciate the amendments that you've taken. I think that absolutely moves it in the right direction. Let's continue to work on, as you said, on the disclosures, because the homeowners need to know exactly what they're getting into, what the constraints are. That may lead to different decisions moving forward. And I think the municipalities that have engaged in this are going to have to think hard about how this affects the program and how we can keep the viability of the program. So if there are specific changes or anything else that counties specifically need to do, but we also need to make sure, be very clear that we're not going to be addressing any other type of tax lien or preference under the system, given the uniqueness of the PACE program.
And we did take an amendment very similar to that. This act shall not be interpreted or applied to affect the status or priority of any municipal or county lien other than the lien addressed in the section, nor shall it create or implied precedent for any further liens in statute.
Right. So, but to the point I think that was made, you can say that, but a year from now, 2 years, 5 years from now, somebody's going to look at what was done here and say, hey, let's do this here, let's do that there. That's something I think we need to be vigilant against, because that's not the intent here.
And I agree. And not to rehash everything in your statement, which I concur with almost verbatim, I will say I have a unique understanding of how important this PACE program is to our state, and how it not only reflects as a monumental opportunity for California to remain a leader in this sector of green energy and giving it to people across the board, but we also have to realize that the structure of a mortgage is a unique institution in not only our state but our country that allowed home ownership for millions of Americans. And we have to balance those two interests of being able to own a home and have that as your biggest investment, and make sure that it's giving those consumers an opportunity to not only own a home and have flexibility in that home to sell the home, to upgrade, to downsize, to have a reverse mortgage, to refinance, but also have the availability and option to engage in a program like this and replace a water heater with something more efficient, to do something where they replace turf with, obviously something that doesn't require water, to add solar to the rooftop. These are not, to me, mutually exclusive concepts, and I think we have to continue to find that balance. But I will tell you, I go back to the original point, if they're already offering this as a contractual agreement option for consumers, and it hasn't ruined the system, why, if we offer that in statute to everyone, would it? So with that, I respectfully just ask for your aye vote.
Assemblymember Brown, you're next.
I have a couple of things I wanted to ask. We keep talking about how this is green energy and how it's helping, but everyone who's against it, the California League of Conservation Voters and Sierra Club I heard earlier, all of them say that they're against it, and we're saying that we're helping the green economy. Could you please answer that?
Well, I've had very extensive and good conversations with both those groups. I continue to work with environmental groups. This is not a bill that is questioning the legitimacy of the PACE program or the work that's being done through the program. I am fully committed to that. I hope that our work will make the program more sustainable in the future and available to more consumers in our state. There are people now that are probably choosing not to do these programs because of their worry over the lien status. If that can be alleviated, this could open up a greater marketplace for these programs. I currently, look forward to working with them as we go forward and we go to the next committee. I respect their opposition at this point. Many of the opposition stated they had not read the amendments. Those amendments have been available since last Monday. I would encourage them to read those amendments. I don't want to tell anyone how to do their job, but I think the amendments have been available for over a week, and I look forward to having a discussion and dialogue with all environmental groups as we go forward, because this is not, like I said, an indictment on the PACE program, nor is it something we want to create any conflict that would lower the viability of this product for consumers in our state. We actually hope to make it more sustainable and more far-reaching.
The other thing I wanted to ask is, or just to make a statement, actually. We had one person who tried to make a statement. That person came all the way from Riverside County. How do we hear the public? I know that this is a long hearing, but there's only one thing on. How do people from the Inland Empire get an opportunity to come up here and testify on a bill?
Well, I will say this: we're a committee of rules, and we have to make sure we give ample opportunity to all sides. I'd be happy to have her come by my office and make her concerns aware to me and my staff if she's still here. Obviously, we have to follow the rules of procedure. But if the councilwoman's still here, I'm happy to meet with her afterwards in my office, and we look forward to hearing her concerns if that's something possible in her times.
Thank you very much.
Thank you. Assemblymember Kim.
Okay, well, I want to thank you for taking this measure. I'm supportive of programs to help homeowners improve their, energy and water efficiency, but it's clear from our discussion today that some kind of a reform is necessary. If the legislature had oversight of the PACE lender program in the beginning, we probably wouldn't be having this issue or this measure today. But now that we're hearing the homeowners will not be able to sell or refinance their homes, and that's not acceptable. So I do think there still needs to be some sort of an oversight for our PACE loan programs, and I'm really glad to hear that you have taken a lot of measures, amendments, to move us in the right direction. And I heard from both sides, and I've met with stakeholders on both sides as well. So I am supportive of this program, and I will be supporting this measure, but I know we're going forward, and as this measure moves through the process, and especially I urge those who spoke in opposition to the bill, if since the amendments have been in print for some time, let us all take a second look and see if it will help you move in the direction of getting us to where we need to go, because I think we all understand this is a good program. We want to maintain the integrity of the PACE program and help our homeowners to realize their American dream of owning a home. And I think this is the right program to do that, and I would be supportive of it. But I ask the author to form some sort of an oversight as we move through the process. Thank you.
Assemblymember Chow.
Thank you. Just so that I fully understand the mechanics of the amendments, these subordination agreements are entered into voluntarily at the time the property is being acquired or purchased, and but these agreements are involuntary or being forced into formation when there is a foreclosure, when there is a loan mod, or when there is a refinance. And finally, when there's a bankruptcy, whether it's Chapter 7 or Chapter 13, then these PACE liens will be treated as though they are tax liens. Is that all correct?
That is correct,
statements?
yeah. So currently, not all consumers are given the option to have the subordination contract. This would clearly do that. But also this would give the tax lien status or super lien status to these programs to allow them to recoup if there's a foreclosure or also transfer in terms of a sale. This is still kind of being debated, but it is clearly not a judgment lien, or some would call it a mechanics lien. That is not what it's been subordinated to. It is a super lien that is now subordinated contractually to the mortgage. And that's all. And I will say, one thing that hasn't come up, what if there's 5 different liens or super liens taken out for 5 different projects, which is completely legitimate under current law? How do those get worked out above the mortgage? Now you have maybe 4 different companies contracted out for different super liens for different efficiency projects that are all on the same mortgage right now. Imagine that in a foreclosure situation, or trying to sell a house with those different, situations where you have 4 or 5 liens. Not that that's, something that's a standard practice, but we've seen stories about that.
Great. Assemblymember Hadley.
Thank you, Mr. Vice Chair. A couple of comments. First of all, Mr. Chairman, I'd like to thank you for the amendments, particularly the amendment making this prospective and not retrospective. If there is a single thing that this Banking and Finance Committee could do to harm all of California, it would be to even pass a bill out of this committee starting to move the seniority of pledges around retroactively. So both as it relates to this bill, but as a matter of general practice, I think it was an important amendment. And secondly, I'm glad to hear that it appears to be uniformity, whether you're for or oppose the bill in its current form. It sounds like there's a strong consensus on stronger disclosure. And I think that's terrific, and that's a necessary element of this bill. And then finally, I'm just going to take a minute as a financial services professional to try to answer a few of my colleagues' questions and try to square the circle on why some people think this is going to shut down the program, and some is going to say it's going to have a modest effect. As long as we do this prospectively, the marketplace will adjust one way or the other. Our job here is to try to minimize adverse adjustments and to make sure that we are still allowing PACE to achieve the public policy benefits that I think everybody in this room and in this committee shares. I don't think anybody in this room would accuse the Obama administration of not having environmental goals high on their list of policy priorities, and yet they have been warning us about this program in California. And I would also say that this is a time, because of the after effects of the financial meltdown, the Obama administration has had unprecedented authority over the mortgage market, with Fannie Mae and Freddie Mac in receivership, and with the Treasury Department having a huge amount of influence over these programs. So why are they stepping on the brakes under the current program? The short answer is that if this is not ultimately rectified, the mortgage market will adjust. And the way that it will adjust is it will reduce the borrowing capacity of borrowers by the amount of lien capacity that a borrower could incur under the PACE program. If they see that as a significant super lien item, even if it doesn't exist at closing, if they see that as borrowing capacity on the part of the borrower in a super lien capacity, they will reduce their underwriting willingness by similar amounts. And what we will do is we will reduce the borrowing power and the purchasing power of consumers that will have significant ripple effects on not just the purchase of homes, but the refinancing of homes. So the biggest mistake you can make in financial markets is to say, well, things are going fine, therefore they're going to continue to go fine. You know, the history of the financial markets is that everything works fine until it doesn't, and then you find out whether your policies were sound or not. as Warren Buffett says, nobody knows who's swimming naked until the tide goes out. And so I applaud the chairman for trying to be ahead of this and trying to implement sound policies that allow this to exist, but to allow it to exist in a way that will allow the private mortgage market to continue to finance. We do have a real dilemma here because it's almost certainly a historical fact that borrowers may have achieved some of the environmental goals of the state. They may have borrowed money and spent it on worthwhile environmental goals, increasing the energy efficiency of their homes, but they may have done it at a very high personal cost to them that they didn't understand because of the weak disclosure standards, and they may now have a big bogey on their mortgage on their home that will show itself when they either try to refinance or they try to sell the home. So we definitely need to preserve access, and I agree with the chairman that a subordinated lien can preserve access to the PACE program for the vast majority of borrowers. Folks who don't have any equity in their home, it's going to be harder. We just need to be aware of that, and we need to make sure that we achieve those goals in some other way. So I do think we still have some more work to do, but I'm going to support the bill today, and I appreciate your work on it.
Excellent comments. Thank you very much, Senator Hadley. I would actually just largely like to echo those. There's been enough discussion, I think, that I'm very content to leave the matter here. Are there any other questions from the dais? Great. The motion or the bill is moved and seconded, and I'd love your closing comments.
Permission to read?
Please.
This is a letter from the Federal Housing Finance Agency Office of the Director, the Honorable Melvin Watt, former congressman who was appointed by President Obama to head the FHFA. Dated May the 1st, 2014. It was directed to the Honorable Edmund G. Brown, Governor of the State of California. Dear Governor Brown, thank you for your letter on April 28, 2014 about the California Property Assessed Clean Energy PACE program. The Federal Housing Finance Agency's General Counsel has been in touch with your staff, and I appreciate the time and materials they have provided concerning California's PACE program and intentions in creating a reserve fund. I'm writing to inform you that the FHFA is not prepared to change its position on California's first lien PACE program and will continue to prohibit the enterprise from purchasing or refinancing mortgages that are encumbered with a first lien PACE loans. California's PACE program would allow local governments to finance energy-related home improvement projects by placing an assessment on a homeowner's property in a first lien position, resulting in the subordination of an existing enterprise-backed mortgage to a second lien position. The effect of this is to increase risk and possibility of losses to the FHFA. Additionally, because these loans run with the land, the ongoing monthly assessments for PACE loans are passed on to any subsequent property owners, including after a foreclosure or a distressed sale, unless fully paid off beforehand. I respectfully ask for your aye vote.
And with that, the committee recommendations that do pass as amended to local government. Madam Secretary, can you read the roll?
DeBobney?
Aye.
DeBobney, aye. Allen?
Aye.
Allen, aye. Sajian? Sajian, aye. Bonilla? Bonilla, aye. Brown? Brown, aye. Chow? Chow, aye. Gatto? Gatto, aye. Hadley? Hadley, aye. Kim? Kim, aye. Lowe? Lowe, aye. Ridley Thomas? Ridley Thomas, no. Stone? Stone, aye. Measures out.
Measures out.
Find that.
You want to leave the roll open? Okay. Oh, actually, do we have consent calendar right now?
Yeah, we did.
We did. Okay. Okay. Well, yeah. So I need to add on. Would you like to call the roll so I can add on?
Consent calendar, Allen?
Aye.
Allen, aye. Lowe? Lowe, aye.
All right. And with that, we are adjourned.